It's about that time of day again. My name is Joseph. It's Wednesday evening, February 22nd, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bearish, and the trading range we finished the session with today, combined with the API levels just released a few minutes ago, are giving us all the information we need to find some reliable trading opportunities tomorrow. The S&P is bullish, but the no trade zone, combined with a key trend line, are both telling us this may not be the most reliable place to buy tomorrow, and look for a move back into the battle zone. Gold appears to be bullish at first glance, but there are two big clues on this chart tonight telling us this may be nothing more than a great selling opportunity for the bears tomorrow. The euro's bullish, and there's big wicks on the candlesticks tonight telling us that buyers are looking to buy the dips tomorrow, and we got a great plan of attack for the euro traders. The FDAX is bullish, but we have a major psychological level on the chart combined with two trend lines telling us that we should wait for a pullback before we buy more tomorrow. Boy, it's been a fantastic week here. Great to be back here with you guys once again on the newsletter. Got a great video for you guys tonight. Please don't forget, though, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're on the YouTube channel right now, it's only a small portion of the video on our YouTube channel. Not to worry, if you're watching the video on YouTube, there's a link in the description of that YouTube video. Follow that link and come join me on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. I'm always posting charts, important links, and updates throughout the day. Follow me on my many different social media channels in the lower left-hand corner. Right below the video tonight, you can download all the charts in tonight's video and have them ready on your computer for tomorrow. Follow that link right below the video on the blog where it says to download today's charts. And please don't forget to grab your free pass. If you're not a member here at School of Trade, make sure you grab your free pass in the upper right-hand corner. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. If you're brand new here to the SOT community, we get a great frequently asked questions page on our blog. And please don't forget, I'm always here to help you guys out 24/7. Hit me up on the live support tool on the right-hand side of the website. Boy, oh boy, this has been a great week. It's been a great month here so far. Another big day of learning and earning opportunities tomorrow. Let's jump right in and take a look at the calendar here for tomorrow. We, of course, now are looking at no major news tonight on the calendar, right? So if you're trading the overnight Asian session, nothing to worry about there. We do, though, as we jump into tomorrow, Thursday, February the 23rd, we go all the way through London, and we kick things off in the U.S. session tomorrow morning at 8:30 a.m. Eastern Time. We get 8:30 a.m. Jobless claims tomorrow morning. Now, to be very honest, that usually isn't going to be a major, market-moving event. It's billed out as a Red Star News event tomorrow, but I haven't seen the jobless claims report move these markets in many, many years. So be aware, even though we do have a major news tomorrow at 8:30, probably not going to see much of a reaction. The big news tomorrow, though, will be the petroleum status report. If you're trading crude oil or the S&P, S&P loves to kind of follow this news reaction. Like I said last night on the newsletter, I always love it when we have a Thursday session with inventories because, as you can see, it's not until 11 o'clock Eastern Time. I always tell my clients, give it at least 15 minutes before, right, and at least 10 minutes after, right? I always try to give it at least 15 minutes before, and, give it 5-10 minutes, play it by ear, because it all depends on how the market reacts to that news event. It will definitely be very slow, though, going into 11 o'clock tomorrow, so be aware of that. It'll be a little bit of an early end to tomorrow's Thursday session for all the crude traders, but be aware, after that news comes out, 11:10, 11:15, you should start seeing the market calm down here again, and then you should have some opportunities going into lunch. So watch out for that 11 a.m. petroleum status report. And of course, please don't forget, whenever we have inventories, again, Monday was a holiday, which we talked about last night, right? Monday was a holiday, right? So tomorrow's, the inventory reports on Wednesdays were pushed to Thursday. So they're usually at 10:30 on Wednesdays. Tomorrow, of course, 11 a.m., right, on Thursday. Keep in mind, right, when we have an inventory day, we have the API inventories that come out tonight, right? So just a few moments ago, we heard from the API inventory report at 4:30 p.m. Eastern time. And of course, the API report's giving us some important levels of support and resistance, which you can find listed below this video. So if you want a copy of all the API levels that we'll be using in the trade room tomorrow for tomorrow's inventory report, right? They're good for all day tomorrow. I'll look at those in a moment on the chart in a moment, but you can find them by scrolling down, right, and click the link that says read more, and you can see all the lists there below tonight's video, right? So look for the employment number, the petroleum status report tomorrow morning, 11 a.m. Be aware again, a little bit of an early end to the session for the crude traders tomorrow at 10:45. Wait for the news to come out, and then you're right off the races after the news comes out tomorrow. And grab those API levels right below the video here tonight. Right, you're going to see those API levels marked up on my crude chart here this evening. You can have a full list of those levels right that we use every day after the API number. Right, so typically every Tuesday night at 4:30 p.m. Eastern time, of course, we get the API number. Holiday on Monday, so it was moved back to Wednesday night, right? So tonight, 4:30 p.m., we hear from the API number. That's that big spike up. And of course, now we have the API levels setting up for tomorrow, right? Let's go right in here now. Crude, S&P, gold, euro. Let's start out with the black gold here, the Texas T. Crude is bearish and trading up off today's low, which will give the sellers a great opportunity to sell a failure back down to retest the low tomorrow. The market looks quite bullish after this afternoon's API number was released, but this is, of course, coming off of news, and we know that buyers can easily take control, but they have to hold the next pullback. Now, guys, we have a couple of these here today, and I want to make sure I kind of talk about this right off the bat here. We got 3 out of the 5 markets here today have an example of this. It's a strong move down and then into a trading range, right, or a triangle. So you're going to see on crude, it's a strong move down into a range, right? You're going to see on a couple others here tonight, it's a strong move down a strong move up, right, into a triangle, right? It's got a couple of the equity indexes, right, trading off in triangles. So spike in range, spike in triangle. Let's start first here with the downside, right? We got crude oil moving lower here. Strong move down into that, right, into that trading range. We've talked about this many times before if you're a veteran newsletter consumer here every evening, right? But make sure if you're brand new here, right, that you really pay attention. Anytime we have that move down, right, this gives me the directional bias. So I now want to be a seller. I'm looking now for price to go up so I can sell it back down again, right? So when we see that strong move down, find that trading range. The key is get me above that high, right, and start looking for those moves going back down into that range. That will always be the most reliable way to trade those types of environments. Now, with that said, when the market goes back down to that low, this is where you have to be really careful, right? You got to be really careful selling the low of a trading range, because what happens a lot is the market will go up, it'll come back down, it'll slide through the low, but then it will snap back into that range, right, and keep going sideways. So you really want to be careful, right, when price goes through the low. We talked about this briefly last night, right? I like to look for a specific type of scenario where I want to see a real strong move through it and then a little trap high, right? I call it the old okie doke, right, or the FOBO pullback, right, the little fake out breakout. It's a trap high, right? It's a very specific type of trade setup, right? And again, what I'm trying to do is I'm trying to catch the buyers on the wrong side of the market. But what will happen is if you see a market slam to those lows, it goes up here. A lot of times what happens is that pullback, right, that selling opportunity here is so obvious for everybody that it's easy for buyers to try to fade into it, right, and buy into it back into that range. What I'm looking for here is looking for a real strong move down, get that moving average outside that range. I want to see that little trap, right? This is a little trap, right? That will usually, right, by waiting patiently for the little trap right there, that will usually if it's going to reverse and go back in, it'll slam back in, right? So it'll keep you from getting fooled by that fake out breakout, right? If the buyers fail in that situation, you're going to see a real strong red candle here. And that real strong red candle will be your clue now that the buyers who were trying to fade that, right, that breakout failure, right, now they're failing and we can now sell. The key components to this is, right, again, when the market makes a strong move, in this case it's down, right, strong move down, look for that, right, look for that up and back down, and then again, big, strong move, right? I don't want to see it just poke its head out below the low of that range. I want to see it real strong, get that moving average, right? Get that moving average to come over, get it below the range, and then again, little trap, right? Little trap right there. That will give me the ability now, right, to see what this market wants to do. Does it want to snap into the range, which is usually what happens? We saw one today on crude. Or, right, will it hold and go lower? Key is strong breakout to the downside, right, and then continue. Now, again, we have a couple of these going higher today, and I don't mean to take up your time here, but you're going to see how this all plays in here in a moment, right? Spike up, big strong move up, and then we go into a trading range, right? You know how to do that, right? We talked about that, right? Buy the low, breakout, pullback, right? Little trap right there, right? So same thing if it goes higher, right? Same thing if it goes higher, right? Buy the dip, back up, and then again, look for that little fake out, breakout, pullback right at those highs. Because remember, a lot of times when it goes to the high, it'll collapse back down in. Really focus on buying low in that environment. Now, today we have a couple of these that are triangles, and they're ultimately the same basic principle, right? So spike up, triangle. The key to a triangle is, right, is look for the extremes, right? Find those extremes. Think of it just like a trading range, right? Think of it just like a trading range, right? So very simple there. Price goes down, right? Up, right back up. Now, what happens though when we get back to the high? This is where it gets a little bit confusing, right? Very easy to see by that low, right? That's really easy. The hard part now is back to that high. What we really want to do is we want to utilize this spot right there. This is where triangles are a little bit different, right? We want to find a way into that sweet spot, right? And that's going to be the one that jumps. Now, this is a short-term buying opportunity here, because usually what will happen is this will usually come all the way back down in. So watch out for traders who are going to fade that move higher back down in. So again, recap on the triangle. Buy the dip, that's the easy one, right? Buy the dip, that's the easy one. A little short-term breakout pullback using the vertex of that triangle, but that usually won't last very long because you'll see people fading off that high to bring it back down into that, right, into that trading range. So the moral of the story is bull move in, buy low, careful buying, right? Careful buying inside this middle, right? Again, it's usually a scalp back up to retest the high, but don't get too greedy up there because it will usually come tumbling back down, right? Back to the vertex of that triangle. All right, I know we covered a lot there. Now let's jump into those charts. Want to make sure we kind of go over that. And again, I moved quickly through it, but you can always go back and watch the video over again. Here we are now, running lower here, right? Running lower. There's that trading range now. Right? Here's that example that I was talking about right there. Right? See how the market pushed to the low? Right? We spent the day today in the trade room picking off those highs, right? Picking off those highs. That was, right? That was our plan today on the way lower. Once the market started going sideways, the plan was to pick it off of those highs, right? Well, what happened? Just before lunchtime, price shoots to the low. Is that a good sell? Well, you can see the reaction now, right? But no, it's not. Why? Because a lot of times you get buyers fading that move, right? So trying just to sell that breakout, that's not going to work. Wait for it. You can see in this case, right, by waiting for it, it kept you out of that common trap that I know I took, right? I always made that mistake when I was a new trader. So now here we are, right? Big strong move down into a trading range, right? Don't sell that low. Now look, we are now, right, up above that high. So this is where we now want these buyers now, right, to fail so we can sell this sucker right back down again, right? So now you can see where that illustration earlier on in the video, right, is starting to play in here right now. We're going to find a few more examples of that tonight, and it will all come together here very nicely for us. Now, this move, right, this whole move here right now is coming off of news. Now, the inventory report has a funny way of being a very bullish market before the inventories come out tomorrow, right? And then see this market turn right over and become a bear market. If you look back over the last few weeks, remember, most weeks the inventory report is at 10:30 on Wednesdays. Tomorrow it's 11 o'clock on Thursdays. So it's a little bit different because the holiday.